Good morning, everyone. Welcome back to our weekly commodities update video. This is where we do analysis on natural gas, oil, US dollar, gold, and silver. We'll be looking at their support and resistance levels, as well as price action to give us more clues where potentially price may head to for later this week. And if you guys are looking for the stock market update video, check out the video from yesterday where I did the S&P 500, QQQ, as well as the Mag 7s. And let's get started on natural gas first. All right, so looks like our falling wedge ended up being picture perfect, the one that we drew together a couple weeks ago since this point. So it's been rejecting here, 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 and another 4 times here. So it's getting pretty tight. So it's likely going to break soon. I thought it was going to break soon, like this week, but ended up rejecting pretty much perfectly off it every single time. And pretty much bouncing it perfectly off of it every single time too, right? So what do you want to see in terms of bulls and bears? I'll give you guys both sides of scenarios. So for bulls, we are pretty much at smack dab at the last level of support, right? You zoom back here. This is where we bounce off of it a couple times, 1, 2, 3, 4, 5 times here, right? So if we break here, we're just looking at pretty much this 52-week low, right? This would, if we break where we're pretty much standing right here at 2.69, we're gonna go straight to probably 2.58. That'll be the last level of support. If we break 2.58, right? Then there's really nothing below us, and the only thing I can see is this maroon line. So I'll show you guys here. So this is where we broke off from, right? It's a multi-year breakout. Right here, right? This downtrending maroon line where we were looking at this probably last year. So 1, 2, 3, 4, 5, 6, 7. And this is where it broke out right around this 3.5. And it ended up having a 65% move after breaking out, right? 62%. So now we're coming back to it. So if we break this 52-week low, we're going to probably come into this maroon line and see if we backtest it and it becomes support. That will be around, if we come to it next week, that'll be around 2.52. So keep on watching that. So we're sitting right on pretty much this support right now. It's 2.69. Break that, we're going to 2.57. Break that, we're going to see if this maroon line would act as support. We test it. The chart looks a little bit different than mine, actually, because this B80J adjusted for contract gaps. So you're going to get all these contract gaps in between. Your chart would look the same as mine. And for the bulls, if you guys break out, bare minimum for you guys, obviously break above this falling wedge resistance line, right? In a cleared, very, very clear downtrend, which is the characteristic of natural gas. It likes to follow trends, especially downtrends. It can just trend forever, right? Even, right, these little bounces along the way cools indicators off, right? So we're not really that oversold still. Talked about this last week as well, right? RSI, we're not even oversold on the daily. We're getting close, right? We're 32. So once it hits 30, you'll be oversold, but it doesn't mean 30 can't go to 12. So we don't want to just be blindly buying just because it's oversold on a daily or whatever. You could potentially play for a temporary bounce if we get something like this at this spot. That would likely mean that every time frame would be oversold. 5 minute, 15 minute, hourly, 4 hour, daily will all probably stack up at the same time, probably in the teens. If we get a 15% drop at around this level after being after selling off this much already, like straight drop, 15-minute, you can probably play for a temporary bounce or something like this, where you get like a nice 10-15% bounce. Anyways, that's a different kind of strategy, but if you guys want to talk about it, book that 15-minute free call with me. We talk more about trading strategies with me. All right, let's continue. So I also want to see it break this EMA 12, this exponential moving average 12, which has been rejecting from this teal looking line. At the same time, break this falling wedge. When this falling wedge breaks, I don't want to just see like it pokes above and then fails. Right? You want to see it break multiple pivots when we get a bull break. So ideally, we want to break 2.96 when we get a bull break here. And if we can break 2.96, we're looking at 3.14. I wouldn't expect it to straight shot break above 3.15, the 3.14 area, but it would be a nice bull break if we can head straight to 3.15 and then like pull back a little bit for like a higher low and higher high. This would be the best case for bulls. You would come from an uptrend back to their favor, something like this. For the bears, right, it could be something like you bounce, come back up, straight shot here, and then reject the whole thing, right? It will end up becoming a weekly bear flag, right? You zoom out to the weekly time frame, monthly time frame, everything is still in bear control, right? Even if we bounce to 3.15, if you just look at this, it's a weekly bear flag, right? And you zoom out even more into the monthly chart, look how much space we have from the top to here. It has a 52% drop. So even if bulls do break bull short term, temporary, right, they can come up to 3.15. Then we'll revisit to see how the price action looks like. But let me see. So if it's a bear flag on the monthly chart, we could bounce all the way to 3.81, and it could still be a monthly bear flag. Right, monthly bear flag is just in this yellow box here. As long as it's below 0.382, that's a bear flag. Let's take it one day at a time. It's going to be really far out. So bare minimum for bulls, just break this falling wedge bull. The worst case is that for bulls, is it breaks the falling wedge and it just kind of goes sideways like this. That would not be a bull break. That is just through time, right? Because you can only have so many candles in the pattern. It would just be like, it's not, it would just be chopping sideways and then comes out of the pattern. That would be not a bull break. That'll be the worst case for bulls, and then it'll probably we'll see what happens after that. But clear downtrend, no trend changes yet. So let's see if bulls can shape something up. Shows up, gives us a big enough bounce, give us some space to work with. All right, let's take a look at oil. If you guys enjoy the video, feel free to like, share, and subscribe. I always appreciate it, and it'll help the channel out. It costs you guys nothing. And let's continue to go with oil. So oil, really nothing, rain trade. Right, it's pretty much bouncing in between this chip chop zone. See how chip chop, it does still in this zone as well, between here and here. So between this 68.2 and 61 is pretty much where it's bouncing. Very clear, right? 61 was the prior resistance. Multiple tops here formed, broke out, come back, back test pretty much exactly. Last week's low was at 61. And now we're just bouncing. So it was likely probably going to come back up to the next range. There is some resistance here. You can see we built a structure here. So that is going to act as resistance at 64. So if we come up to 64 and can't break above that, we're just going to chip chop probably in this area. If it does break above 64, then we're looking back up to 66.6. And then it'll be perfectly in range with just like these levels. It'll be perfectly back in range. And for bears, we want to crack through this 61, open up this whole range down here, right? We can crack through 61, we're back down, come back down to 59, which is this prior structure here. We've been going sideways for around May. All right, let's look at the US dollars. Any improvements or not? Nope. I'm surprised this weekly EMA 12 was actually still acting against resistance. Yeah. So bare minimum for bulls, get over this weekly EMA 12, right? Reject, 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 reject on the dot, reject, upper wick, never close above it, never close above it, never close above it, reject it again. So it's very clear this weekly EMA 12 is acting as resistance. So let's see if it will ever close above it in 1 week. If it does, then we're head to 99. And we'll likely head to this green line if it does close above this EMA 12. And very clear resistance here on this green line. 7 rejections here. But let's take a look at the daily. So daily, it's not looking that great. No clear trends either on both sides. Although the longer term trend, right, weekly, monthly trend is in favor of the bears. This is what a bear flag looks like. So you guys saw that big drop on natural gas, right? And you get this big bounce, and you can see this is what pretty much a bear flag looks like on the monthly chart. See how weak bounces? So that's why you got to be cautious if we do even get a bounce on natural gas. So yeah, so the dollar is shaping up still a monthly bear flag. It could just kind of flag around here for a while. Go sideways in the zone, kind of like that. Probably be the yeah, no clear trends on the daily. It's messy sideways. Yeah, so probably trading between 99.3 and this $97 zone. Wow, it's just kind of flagging. Obviously, you got that big drop on Friday, right? Jackson Hole. Jerome was talking about Powell saying he's a lot more dovish, so we're definitely getting a rate cut on September. That made the dollar drop a bit there on Friday. So, all right, let's take a look at gold and silver. Has it broken out of its ascending triangle? Nope. Still forming its picture perfect ascending triangle. Bounce, 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 bounce. Held it again this week. Exactly the dot. The top, reject, reject, reject to the tick last week. So yeah, just we'll wait for it to work out of this pattern. Usually, the ascending triangle is a bullish pattern, obviously, because the psychology of it is buyers are stepping up higher and higher at a more expensive price, right? Buyers bought here initially, buyers buying here now, and buying are willing to buy a little higher. Buyers are willing to buy even more higher, right? And sellers are selling at the same spot. So it's kind of like a bullish pattern. Usually it will bull break like this, but there's no guarantees, obviously. So we'll have to see which way it ends up breaking. But you guys get my explanation on the psychology of the pattern. So we'll see. Let's take a look at silver, see if it's picking up its relative strength or not. All right, so this is what we call relative strength on the last 3 days, right? You can see this is 1, 2, 3 days. The 3-day bounce, we don't need to look at the percentage, but the 3-day bounce above its drop, right? You can see gold. This is when gold dropped. Look at how much it dropped, and on the bounce, it only bounced about like 30% of this entire move. Meanwhile, silver bounced back above all of its this redness. So this is what you want to see: rotation between the metals, especially when gold is chilling out, going sideways like this. You want to see silver on each bounce. When we get like these small bounces, you want to see silver get these big bounces. So it looks like it might be gearing up for a breakout. So let's see if this can break out when when gold comes back up to like 35, 32, and retest this area again. Let's see if we get these relative strength outsized moves, which it did in the last 3 days. So it's a good sign for the bulls. And then when it does break above resistance, break above these 39s where we have topped out here prior, you want to see gold break above these 35, 32. That would fuel the whole sector, metal sector to break out together. That'd be the best case for bulls. For bears, you want to see this bounce and this starts to weaken a little bit and it doesn't break above 39. and it rejects from there again. And then when this drops, this becomes a bear break. And you see like this. You want to see this kind of candles where it's relative weakness and breaks below. That would be what the bears want to see. That being said, silver is sitting right on resistance, right? This zoom out a bit. Reject, 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 reject. Slight rejection here again, right? You can see the tiny upper wick. We close right below it. So we'll see where because gold is a weak bounce, there's a little bit of space. If this ends up being a bear break and we just reject right here, bears need to show up pretty much right away. But so far, bulls is still in bulls' favor because it's going sideways at all-time highs. All right, that's all for you guys. Feel free to like, share, subscribe, and support the channel. I'll see you guys next week for more updates. Have a great rest of you guys' weekend, and stay safe. Put your stop losses in and all that kind of stuff. And take care.